Okay, good day everyone and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Bile Dar from Danske Markets. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead.
Thank you very much, and I also, of course, would like to welcome you to our first quarter report, and pleased to see that so many of you are here. For sure, we have significant security support around us, and so it's pleasing that you've been able to get here. We hope also the technique will work, as we'll see how it goes in terms of the wireless communication a day like this. Going into the report, key highlights, we are reporting a stable quarter, a flat like-for-like, an improvement versus previous trends. We are growing in all markets. What somewhat sticks out is the UK with an improved overall macro, even it's coming from a lower level, but the macro and the shopping on the high street is improving. And it's also reflecting in our sales, as well as we are doing some activities in the UK that supports. However, we have a very strong Swedish krona that is impacting both our top and bottom line. On top of the already announced initiatives that we are doing in Germany and Clas Office, we are also today reporting or announcing an exciting milestone in our history, as we are now joining a partnership with a strong, experienced franchise partner to expand our concept into the Gulf region. I will come back, of course, later on that during the presentation. The agenda will go through the key ratios for the first quarter. We'll inform about the latest trends in terms of our sales in August, and then we'll cover the strategic areas for Clas Ohlson and give an update. And then we have Danske Bank and Bile here coming to lead the Q&A session. Before we're going into the quarter, just a quick highlight on where we are today. We have 178 stores in our 4 countries. Rolling 12 turnover is 6.6 billion SEK. But let's now go into the quarter. It is the first quarter for us, and just as a reminder of that, May to July, first quarter in our new fiscal year 13-14. And as always, a bit before going into our key ratios, a few words about the macro environment and particularly the consumer confidence in each market. What we have seen is that it is a slightly better confidence in both Sweden and the UK. UK then coming from, as you can see on the slide here, from very low levels. Finland is still in a challenging phase, and in Norway we have seen a slight dip last month, but still Norway is still on a fairly positive level overall. And how have we performed during this period? Well, we, from a sales point of view, we are growing with 5% in local currencies. Like for like, it's been a flat development. Again, the strong Swedish krona, particularly against the Norwegian krona, but also against the pound, has impacted our top line growth. So we are reporting a 3% growth in total in the quarter. By market, Sweden, I think based on the somewhat volatile traffic pattern that we have seen this nice summer, we have noted a fairly stable development. We have improved our conversion as well as our ticket value in the stores, and that also leads now to that we are reporting a 2% growth to 703 million SEK versus last year 692. We continue to strengthen our position as we see it in the market, and have a fantastic consumer confidence out there in terms of our concept. Norway, we're also reporting a 2% growth in Norway in Swedish krona, but as you can see, it's also very much influenced by a currency effect, as in total in local currency we have a 7% growth. We can continue as well, even if we have seen a slight dip. I think we've not really seen that in our figures, even if it's we continue to strengthening our position in the Norway market. We have expanded with more stores and continue to have a good position in the Norwegian market. Finland continue to strengthening the position and continue to build the brand. We are growing with 20% in local currency, though supported by more stores. And it's fair to say that the market in general is a challenge. But we are building up our position in Finland and will continue to do so, even if we are now holding up a bit on the new more stores to see where the market goes. But we are continuing to strengthen our position in the Finnish market. UK, pleased to see that the indications that we're now seeing in the market in general is a slightly more positive atmosphere on the overall on the high street in the UK. We have increased our marketing efforts that has given positive results on our overall brand awareness, but also has resulted in a positive sales trend. We are reporting a 7% growth in local currency in the quarter, supported by a strong July with an 18-19% growth. So going in the right direction in this big market, still a long way to go, but it's going definitely in the right direction. Leaving the sales into the gross margin, we are reporting a negative gross margin development, which is purely due to negative currency effects. Again, mainly to the Norwegian krona. I don't know if you've seen it, but the Norwegian krona during this period has been on its lowest level since 2003. Share of sales cost, we continue to focus on our efficiency program at the same time as we are investing our time and resources on many new initiatives. But this leads together that we are holding up our costs and we are reporting a flat share of sales cost versus last year. And these key ratios then sums up our operating profit to 92 million SEK, which is then slightly below last year, again due to a currency effect for us. But it's a fairly stable overall development. Moving on to our financials in terms of our cash flow. We have a strong operating cash flow, improved versus last year, and clear results behind a very good inventory control. That is also an example of that we are reporting an all-time high turnover rate at a distribution center up in Insjön. End of the period, our net cash situation is 194 million SEK versus last year 103. So we have a positive net cash situation in the company. Of course, also affected that we have had slightly lower investments in this quarter, which is mainly due to less IT investments versus last year when we invested particularly in our e-com platform. That concludes the key ratios for the first quarter. If we then go along and see what have happened after the period, of course, it is one of the interesting parts is August. And we are reporting a 6% growth in August in SEK and 7% in local currencies. Going in the right direction. Sweden is the same as the first quarter. Norway improving. Finland is the same. And UK is also continue its positive development versus last year. That covers the key ratios and some of the figures. Let's now move into some comments about our strategic initiatives that we're working on. Well, we talked UK, and we've had a positive development. The last 2 months, we've seen on average 13-14% growth in the market. It is clearly an improvement in general in the macro situation, again from low levels, but also that we have during this period invested more in brand building activities to build the brand. Previously, we have reported that we have seen the brand awareness moving up to 25%. We have also seen indication now that August is reaching close to 30% brand awareness, which is supporting the overall traffic. It supports the conversion as well as it supports our sales figures in this market. We'll continue to work on the existing 12 stores that we have, as well as the new e-com platform that we have launched in the UK. Another strategic area that is on focus for us is our multi-channel approach. We launched a few months ago our loyalty program. We are now up to over 360,000 members in the program. It goes in the right direction, and we continue to see that the consumers in Sweden like what we have to offer, and there are more and more people who are signing up on our Club Clas offer, which of course is a positive way for us that we learn more about our consumers. More importantly, also we're able to become even more targeted and even more efficient in terms of our marketing, and it is a positive for our loyal consumers out in the market. We also launched now a new catalog, which is we are in this period when we are releasing our new catalog. We just had a release on that in Interim last weekend with more than 1,000 news. And more importantly, the integration between the web channel, the mobile phone, the stores, to integrate these channels continues. We're taking a step in this that will support our total sales efforts. We also announced last quarter that we see potential of business to business. We have a lot of customers today that is coming from, particularly from small to medium-sized offices that is shopping their supplies in a Clas Ohlson store. We like that, but we have not made it as easy as we could have. So we are now starting to make a preparation to make it significantly easier and better in terms of for the business-to-business consumers to shop at Clas Ohlson. We call this Clas Office, and plan is to launch this in a better scale early 2014. Today we're also announcing that to facilitate our business development as well as to secure that we are further improving our efficiencies, we've decided to invest in our IT platform. We have selected a software. We are worked on this for some time to be very selective in terms of what software and how does this look for Clas Ohlson to fit for our business model. We have selected now the software, and next phase is that we are going into is the so-called design phase, where we are reviewing the architecture of our IT systems and looking on how and when we're going to upgrade our various systems that we have. In an early phase that we initially estimate from this as we estimate that we will invest around 50 to 70 million SEK per year during the coming 5 years in terms of total IT systems, not only for this platform, from total pace. Regarding new markets, we continue with our preparation to go into to Germany. We are looking at 1 to 2 stores in the northern part of Germany. It's a very interesting market for us, where we have indication and we looked at our studies that the consumers want us to come there. There is nothing similar to Clas Ohlson, and we'll continue now to prepare for that with a plan to launch this at earliest in the calendar year 2014. But today we're also announcing, we believe, an exciting milestone for Clas Ohlson. We are starting with franchise as a complement to our existing current operating model. It is clear that the strong concept that we have attracts now international strong franchisee partners who wants to invest and wants to take Clas Ohlson out into their regions and out in the world. And of course, for us, this opened up a lot of new opportunities during the way. We have signed a contract, and we are pleased to say that with our first partnership, Al Homasai Group, a family-owned company with a strong and experienced platform in the region, as well as a long experience of working with international brands. One of them is IKEA. This partnership includes the GCC region. It's 6 countries. And our first step here is to go into and come with 2 stores. We'll come back to that a little bit later. But it's a very interesting region in general. It's a region which is growing. It's a region where you see the consumers are having more spendings, as well as interesting in terms of our expansion strategy with strong shopping malls. That we, after they studied this, also there is nothing similar to a Clas Ohlson in the region, but there is a strong attractiveness to the range that we are offering, and the concept to put this together in one place at great value. Financial implications from this. Well, we are going with the franchise partners. It's a long-term great opportunity for profitable growth. But it's also, for our sake, it's limited investments as we are going with the strong franchise partners, and the investments will be included in the financial frames that we've set out of investing 2 to 3% of our EBIT margin on our international expansion in total. Next steps are clear in terms of this. We plan to open up 2 stores already in 2014 in either Dubai or Kuwait. And after evaluation of these first stores, we will decide on further expansion and how to roll that out based on the outcome of the performance of the first 2 stores. We are clearly seeing an opportunity here of minimum 20 stores in the region. I showed this update before in terms of our roadmap towards our vision in Clas Ohlson, and I think it's clear to say that we have a strong pipeline of activities, not only going international, but also continue to develop our concept on our strong home markets, as well as to see that we continue to develop the concept overall in general to take that outside the Nordics. It is an area for us where we are continuing to strengthen our competitive edge to reach our long-term financial goals. And if I summarize this, for the quarter, fairly stable quarter. Again, we are growing in all markets. We're strengthening our position in a general challenging environment. We've seen currency effects affecting both top and bottom line. But our financials are strong, and we're continuing on invest for the future. And looking at the already announced next steps that we are planning, one of the bigger announcements today is also that we are looking into a franchisee model that we think is very exciting for Clas Ohlson in general. Biele. That concludes my presentation.
All right, thank you. I'll start off with a couple of questions before I hand over the microphone to the audience. UK has obviously been a good performer in the quarter. Could you just give us a flavor on the KPIs in terms of traffic conversion, and the market development overall, and what the difference today compared to, let's say, 1 year ago?
The traffic in general on High Street also affecting us is not dropping as what we have seen. It's been able we see the traffic starts to come back. But clearly also so that is a positive element, as well as the marketing effects is also supporting an improvement in both conversion as well as ticket value.
And peers have reported relatively good figures as well, at least for this part of the year. Will this imply that you will be more aggressive in terms of marketing, just to capitalize on the increasing demand?
We are taking some steps now, and I think that journey will continue. We need to continue to build the brand in the UK. We have a long-term approach to the UK. We'll continue to build on that, and of course it's positive to see that it works. We'll continue to support the brand in the UK. Yeah.
And given the structure you have today, and if we assume that volumes will continue to grow, is the structure sufficient enough to reach break-even, or do you need to make active changes in terms of sourcing or even potentially adding new stores?
Well, long term, of course, there's a huge potential for more stores in the UK, clearly. But I think I've said that a few times. The structure we have a very low overall G&A cost in the UK. Our distribution works from Insjön, so it's about to get the store performance up to get that to work. So we don't need more stores to get up to profitability in that aspect.
And in terms of you mentioned earlier this year that you plan to expand into Germany. The franchise deal today is obviously a new step change as well. And then on top of that, the IT investments that you referred to. What does this imply for the core markets? Have Sweden and Norway moved into sort of a margin preservation mode, or how do you optimize that? Because obviously the growth opportunities aren't as big in Sweden and Norway going forward.
No, and I think at some point of time you're reaching a mature level, and we've said this as well, that we have started, and you've seen that we have slowed down the expansion in our home market, Norway and Sweden, for some time. There will still be opportunities for more stores in both Sweden and Norway, but not as many as we've seen before, and that we follow the market more. If they're coming up new shopping centers or new areas, that will be interesting. But in general terms, we are covering more or less both of these markets in a good way. But of course, we are talking about the multi-channel approach, where we can do a lot of things, and we are working on a lot of things to continue to improve the position in both Sweden and Norway. We have, as you know, a platform of solving many of the practical small day-to-day problems in life, and I think the opportunities there are still many in terms of increasing both traffic and conversion in our stores.
And looking at the development on the e-commerce side of your business, which obviously is a small part today, but there seems to be a rather big drop in this quarter.
But the drop is very much related to last year. We had the launch campaigns and a lot of efforts around that, which we've not had this year. We increased on total last year close to 30% on total growth. But I think the more importantly, and I think we said that all the time, this is one channel, and the channel supports the total Clas Ohlson, and that's how we worked, that we were working, and we look at it, that we want to have channels that is working together, and we see clearly that the new platform is also we are trading on it, but we also have a lot of consumers going into the mobile platform or the computer platform and looking at the products, and also seeing and searching for the closest store, and where do I find it, and is it available on the shelf, etc. So it really works together.
I think I'll stop there. I have a couple of more questions, obviously, but do you have any questions from the audience?
Hi there, Martin Arnell with ABG. I have a question on the like-for-like sales, or the sales actually in general in the quarter, because it looks as if the effect from new stores is quite low. Any comments on that?
I don't think that differs a lot, but of course that the more we go, if you're looking at the mature market, the stores that we are not adding are not as, make it to the extreme, and not as big as a Gallerian store, as an example, close to. So of course that the effect becomes lower and lower for new stores as they are smaller, and it depends on where they are located, etc. So I think there are no big difference in this quarter versus previous trend.
Okay.
I can just also ask a question on SG&A costs, which at least surprised me a bit. On the positive side, they were a bit lower than I were expecting, and maybe you can give us some idea what's happening here. Is there temporary effects, or are you doing something to lower SG&A costs?
We are working on trying to be as efficient as we can, and of course, I don't know, it is important for us to follow the market, as we've seen. It's a challenging market, and we are holding back and trying to become as efficient as possible. But the larger steps, as we've said, we've taken that early on, and we don't have many larger steps on that on the store basis. Some of of course, the effects that also follows the currency is that the cost also goes down in Norway based on currency transformation. But in general terms, we'll continue to keep high focus on cost. We'll add more cost in terms of the program we are launching, but in general terms, we're not seeing that we can reduce cost significantly more as we move along.
Okay. Maybe also a question on the catalog when we now have this multi-channel strategy going. Do you see that your catalog is sort of tying your hands in terms of pricing? I'm thinking that online the pricing environment is more dynamic, and maybe there's a need to be able to adjust pricing more. Do you feel that the catalog is restricting you, and do you have any plans at all of maybe discontinuing the catalog? Or?
No, the catalog is a very good marketing tool, particularly in our home markets for us, but also new markets that presents the range in a positive way. We have historically, it was tying us in as we had pricing valid for 1 year. We have changed that, so we are more flexible. And if there is something that changes, particularly in the multimedia, that you have significantly faster changes on pricing in general, that we have that flexibility to change pricing significantly faster. And the catalog is valid. Pricing is not valid as long in the year any longer as well. So we don't see that it's tying us up as we use the flexibility that we have in that.
All right, thank you.
I think we have questions from the telephone conference, or at least let's check if we have questions from the telephone conference.
We have a question from Mr. Niklas Ekman at Carnegie. Please go ahead.
Hi, I'm sorry I couldn't be there with you today, but I just want to ask a couple of questions still. I'm curious about this franchise expansion to the Middle East. If you can talk a little bit about the financial implications here. I mean, 20 stores, if that is the kind of expansion, that's a rather massive investment. But is it right to assume that the majority of these investments will be taken by your franchise partner, and your part of these investments are more or less limited to setting up logistics? Or can you just explain a little bit about the dynamics here, about what kind of costs you will be taking for this expansion?
Hi, Niklas. No, you're right. The majority of the investments is part of from the franchisee, the partner. So, which is based on the setup that we have, and I'm not going to go into details on that, but it's a kind of a normal setup where we have a franchise fee and they are buying the goods from us. But the major investments in terms of setting up, driving new stores and so on is on the franchisee part.
Okay, and can you tell us a little bit about local adaptations? I assume that they will not be the identical products that are sold, but you will have to be doing some local adaptations, or can you elaborate a little bit here on your thinking?
No, you're right in terms of, and of course the investments we are doing is more of, as you're pointing out, looking at the range and what we need to adopt locally. But we are looking at it from a UK perspective. You can see it as more or less the UK range is a base, and then we will start to do the fine tuning for local adaptation as we are now starting the journey as of more or less today.
Also, finally here on logistics, how will you manage logistics to transport these products to the Middle East?
The franchisee partner will set up their own smaller distribution center, so we will ship it from initially for the first 2 stores to evaluate these and to not take any large distribution costs for any of the parts. We are going to ship it to their local warehouse, and as we move along, and when we are ramping this up, we will look at seeing differently in terms of distribution setup. But for the first now 2 stores, we're going to ship it to a local warehouse on their part, and then they will distribute it to the stores from their side.
Okay, so sorry, one more question here. I mean, you're talking about two stores here initially. how long will these be evaluated before you ramp up expansion, do you think? Is it 1-2 years, or could this be quicker?
Well, I think, at least as we know, at least 2 years is what we tend to look at when we're looking at new store. But it, of course, could go quicker as well. But you want to give it a 2-year period at least.
Okay. I also have a question on the UK, just to understand, because it's an impressive improvement in sales in both July and August. These marketing activities you're talking about, how much of this is, long-term brand building and how much is immediate campaigns? Can you just give us a feel for here to see if this is maybe a sustainable improvement in sales, or if this is a direct response to a short-term campaign?
It's not short-term campaign. It is brand building activities that is supporting the brand. Then of course it's support when you go on advertising and then you go off air, you will have a different situation, but it is not driven by campaigns.
Excellent. Thank you very much.
I remind you that if you want to ask a question, you will have to press 01 on your telephone keypad. That's 01 if you have a question.
All right. We've been spending a couple of minutes on the franchise deal. Could you just give us an update on where you stand in terms of Germany?
Germany, we are continuing the preparation for Germany, which is very much related to translation on the assortment and on the range. We also working on locations, finding the right location. So it is very much a preparation mode at the moment. When it becomes sharp or direct in that aspect is when we find the right location and you speed up the progress of recruitment and so on. But that will do that when we find the right location.
And when you look at the e-com landscape in Germany, comparing that to Sweden and Norway, what are the immediate differences or challenges?
Germany, from an e-com, purely an e-com, as you know, you follow Germany, it is a challenging market in terms of return rates and so on. So, but for us, it's very important to look at this as, again, a multi-channel approach where we have a store and we have an e-com platform that supports the total concept. So, yeah.
Okay. I don't have any further questions. Do we have anything from the floor? Yes.
Stefan Wikholm. You have 12 stores today in the UK. That is certainly a low number compared to the population. You seem to have put the expansion in the UK on a hold. You are going from Germany. And from the outside, I don't know exactly what kind of conclusion to draw from these facts, but it seems to me that you have been disappointed with what's happening in the UK. Otherwise, you have expanded that further, and now you are betting on Germany. Is that right? That's the reason you are going for Germany? That's the first question. The second one is, why should we expect Germany to be better for you than the UK?
No, I think you're right in terms of that we have opened up the 12 stores. We have concluded that we have now a network of stores in the UK, and the UK at the same time, as we all have seen, has gone through some very drastic, challenging times overall in the market. And at that time, we've decided to hold up and hold the more expansion phase and work on the existing base, which we're now doing. We are improving, and we're also working on building the brand in the UK. And seeing that this will take time, but we're also seeing that it goes in the right direction. And as soon as we're getting up to a level that we can then add on more stores, as you're pointing out, because as you're saying, the potential in the UK is really strong. Relating that to Germany, I think each market is different. We see the different dynamics even in the Nordics. We see a potential in the German market. We indications from our own studies as well as from many visitors up here in the Nordics in terms of a Clas Ohlson concept. There's nothing similar to it. There is a gap in the market for this, and we see that there is an opportunity for us to start learning the German market and get get the reflection before we then. So we are doing it. We open up 1-2 stores in Germany, getting the learnings, and then roll out after that.
Thank you.
All right. I think I actually have one more technical question. Have you concluded the buybacks that to support your incentive program?
Concluded what?
Well, the buybacks that you've been doing throughout the summer, are you done with that now?
Oh yeah, we are done with that. Yeah.
All right. Okay. Good. Any final remarks?
From me or from?
From you.
No, I think we are in a exciting time in Clas Ohlson. I think that's a remark for us. It is a challenging time in general. I think we are handling that perspective fairly on a stable basis. We continue to invest for the long term for Clas Ohlson, investing in UK. We are also looking into more markets, and we're also now, I think, having a new platform to work from in terms of a franchisee concept. Also very much looking forward to going into a new segment, the business to business, down the road. So, no, I think that sums up.
Okay, thanks for coming.
Thank you. Thanks for coming.